Yes. So now we are playing ICI Moto song. I request all the participants to put their right hand on their heart.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Good evening, all. Chairman of the branch, CA Fenil Shah, is in his absentia. Faculty of the first session, Advocate Shailesh, Sheth sir. Chairman of Indirect Tax Committee, CA Rahul Maliwal. Coordinator of the first session, CA Tushar Jain. We warmly welcome you all to this virtual meeting where we are definitely going to learn more about nitty-gritty of the GST. And if you experience that ICI motto also has been loudly be listened by all of us at that time, because this is the first time I found that in virtual meeting also we have a clear ICI motto song to be played. Shailesh Bhai sir is going to deal with 7 to 8 topics on burning topics, I can say, on the GST. And sir, today you have also posted judgment of Kerala High Court. So in this virtual meeting, how we should have to appear before and what are our rights? If you can throw some light on that, we all will be benefited. So once again, welcome, sir. And now I request CA Rahul Maliwal to introduce the session. Thank you.
Thank you, Vishan Bhai. The chairman of the Ahmedabad branch, CA Fenil Shah, in his absentia. The expert faculties of the today's session, Advocate Shailesh Sheth sir and the CA Bimal Jain sir. The secretary of Ahmedabad branch, our beloved CA Vishan Bhai. Coordinator and the member of the IDT committee for the sessions, CA Tushar Jain, and all the members participants. I welcome you all in the today's knowledge manthan on the critical issue under the GST and understanding the nuances of GST in the real estate sector. As are the intro para mentioned, the definition of genius is taking the complex and making it simple, which is said by the Albert Einstein. And you all will agree that the faculties for the today's session are simply genius by making such a complex GST and into the easy approachable for us. So we can say that GST is by default making us little wiser each day, because due to the enormous changes in the law, by frequent notification, press release, sometimes Twitter updates, one need to be a voracious reader of same. Now I just elaborate the focus of the sessions for today. The first part, which will be taken by Shailesh Sheth sir, is around the 4 to, as Vishan Bhai said, 5 to 6 controversial aspects in the GST, like the aggregate turnover, taxable supplies, conditions of section 16 subsection 2 clause C with regard to availment of ITC, that is the time limit for the availing of the ITC section 16.4, and the restriction on the availment of ITC with regard to rule 36.4. And the second session will be headed by the CA Bimal Jain sir. He will be with us approximate around 5:30. And the focus of the session will be on the understanding the taxations on the real estate transaction, works contract, and the development agreement. So with this, now I'll request CA Tushar Jain to introduce the Shailesh Sheth sir. Thank you so much.
Thank you so much, Rahul ji. So it would be my pleasure to introduce Shailesh ji. So Shailesh ji has over 30 years of experience in consulting, advisory, and litigation practice in the field of indirect taxes laws that include central excise, service tax, VAT, CST, GST, state VAT, etc. Shailesh ji is also one of the partners in legal firm, namely Messrs. RVS Legal, having its base in Chennai, Bangalore, and Mumbai. Shailesh has more than Shailesh has been a regular faculty in various professional bodies as well as trade and industry forums on his chosen field. He has already delivered more than 80 lectures since April 2017 on various aspects of GST all over the India. Shailesh is regular columnist in Vyapar, a bi-weekly business newspaper of Janma Bhumi Group on service tax, central excise, and GST. Besides professional bodies like Chamber of Tax Consultants and AIFTP, Shailesh is also associated with various trade and industry bodies, including Indian Merchant Chambers, BSC Brokers Forum, and other bodies, guiding them in field of indirect tax. So with this, I would like Shailesh ji to start with their deliberations and shower their knowledge on us. Thank you.
Thank you. Thank you for kind and appreciative words. Shehzad is there, I hope, Bishan.
Yes,
We
Shahzad
can
bhai,
start
kindly,
playing that. Yes, we can start.
kindly,
You can
presentation.
share the presentation, please. Yes. So, good evening, friends.
Presentation visible?
Yes, yes,
Okay.
yes.
I think all are comfortable. So, friends, there are altogether 6 topics which we have earmarked after due deliberation with Bishan Bhai. And these are the 6 topics, out of which 5 are lively, dispute-prone, and critical, intricate, complex issues, which are right now in the midst of dispute and litigation all over India. The first 5 topics are. As far as the 6th topic is concerned, which pertains to e-invoicing, I'll just see if I can throw some light on it. My idea is not to get into the technicalities and how the system will work. It would not, you are all better equipped in dealing with that aspect rather than me. But e-invoicing is a concept which is now catching up. Almost 20 countries have already adopted or are in the process of adopting the same, including the France, where the country has vowed upon to switch over to e-invoicing completely by 2025. So it would be very essential to understand the philosophy, scope, and the implications of this e-invoicing concept, particularly in the context of the Indian GST. However, I will deal with this topic only if the time permits. I have some reservations whether we would be able to deal with that or not. I would not like to rush on any of the topics. So maybe if I'm unable to deal with the 6th topic, sometimes in the future, we will try to discuss on that, whenever the circumstances present for itself. Taking the cue from what Bishan Bhai said and what Rahul ji also said is, in fact, Rahul ji made a very pertinent comment that we are trying to improve our understanding about this very complex piece of legislation, or rather a very simple tax policy which has been converted into a very messy and complex piece of legislation. But here I am reminded very fondly of the genius Nani Palkhiwalaji's word, whose birthday centenary year also Ahmedabad branch has celebrated with a very much aplomb and respect, a very, very grand gesture by the branch, I would say. Because if one person who who can be revered and respected by the professionals across the country for all ages and generations, it is one Mr. Nani Palkhiwala. So, in one of the anecdotes associated with him, as you friends must be aware of, Nani had written a mammoth, you call it Mahabharata or Bhagavad Gita on income tax, his commentary. And he had expressed some view on one particular issue. After some time, so maybe after some years, on the very same issue, when he was discussing the matter with probably a client or in an open fora, then he actually gave a very different view. So he was asked, sir, in your book, in your commentary and analysis, you have already expressed your view, which is different than what you are now canvassing. Then Nani simply said that I have a right to become wiser by the day. So don't ever forget your right. Every one of us has at least one fundamental right, and that to become wiser by the day. So we can't get stuck up in one set of mind, rigidity, and as what Gita calls it, the abhisandhan, that mind conditioning is the worst enemy of any professional. So it's a question of only keeping our mind and our faculties open, our mental faculties open to assimilate, to understand, to digest, to accept, to receive everything which is good and which is at least from the professional perspective, which is necessary for us. And Bishan said about Kerala High Court judgment, which I had just posted in the group about 15 minutes back. It just has been reported in Text Sutra. The total full text of the order is not available, but it was obviously the counsel for the party must have given the verdict, given the gist of the what was argued. It is regarding the virtual hearing and certain nuances of the virtual hearing which the authorities are required to follow. I will deal with it at the end of the session. Since we have another very eminent faculty, very respected and learned faculty, C.S. Bimalji Jain, who would be dealing with the real estate aspects. And his session is expected to start at around 6 o'clock. So I would like to close my session at 5:45 as far as possible. And then we can deal with the question answer for another 15 minutes or so. I hope, Rahulji, Tusarji, this would be fine. Am I correct?
Yes, sir.
Okay.
Sir,
fine.
Sir,
Bimal
yes, sir, session will be start approximate around 5:45. So if we can take up to 5:45, that would be fine enough, sir.
Okay, fine. I was under impression that I have 2 hours, but that's fine. Now I will try to close because some of the participants, if they have questions, I would just allocate 15 minutes for the question answer.
Thank you, sir.
Okay, fine. So let us start. I'll come straight without wasting any time on other certain things which I would have liked to dwell upon. Let us come straight to the first topic of the concepts of taxable supply, non-taxable supply, aggregate turnover, exempt supply. These 4 concepts are going to see a lot of fireworks, friends, in the coming days. As of now, these concepts are being, presenting themselves for interpretation and understanding at the grassroots level, at the implementation or execution level. So far, they have not largely converted. There have not been much disputes as of now, except some couple of disputes which have gone into the advance authority ruling, before the advance authority ruling, where the parties have approached. I'll deal with them also. But by and large, as my interaction with the taxpayers and the tax professionals show me, that these are the concepts which are baffling and confusing at times, when what to give the effect to, in what manner, particularly in the context of certain entitlement to certain benefits, as well as the registration threshold. So from this overall perspective, we will try to deal with these 4 concepts. The first one. Cesar, please come to slide number 12. The first few slides are actually reproducing the definition of the various terms which are relevant for our discussion. So, slide number 10, please. Now, friends, if you will see, the term aggregate turnover has been defined in section 2, subsection 6. And it says aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supplies on which the tax is payable under reverse charge, exempt supplies, export of goods or services or both, and interstate supplies, of the persons having the same PAN number to be computed on all India basis, but excludes central tax, state tax, union territory tax, IGST tax, integrated tax, and compensation cess. Now, there is another expression which has been used is a turnover in a state or turnover in union territory, which is defined under section 2, subsection 112. And it is more or less on the same lines. It includes everything except the inward supplies on which the tax is payable by a taxable person under reverse charge, as well as the taxes which are payable under the GST laws. Otherwise, the definition of turnover in a state or turnover in union territory is almost identical with the definition of aggregate turnover. These two expressions have been used at different places in a different context. And that's why it is important to keep them in mind. Coming to aggregate turnover, friends, is the definition itself shows it includes all taxable supplies, exempt supplies, export of goods or services or both, and interstate supplies of a taxable person with the same PAN number, but on all India basis. Coming to the taxable supplies, this term itself has been defined under section 2, subsection 108, and it means a supply of goods or services or both which is leviable to tax under the Act. Here the Act means CGST Act. And please bear this particular definition in mind. This is going to be an all important definition in our discussion. So taxable supply means a supply of goods or services or both which is leviable to tax under this Act. And all such taxable supplies will have to be reckoned or will have to be considered for the purpose of aggregate turnover. Number one, exempt supplies. The term exempt supplies has been defined in section 2, subsection 47, means supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt under section 11 or section 6 of the IGST Act and includes non-taxable supply. So exempt supply has been defined. It has 4 attributes, 4 components. 1, which is attracting the nil rate of tax. 2, which is wholly exempt under section 11 of the CGST Act or corresponding section 6 of the IGST Act. 2, 3, it will include even the non-taxable supply. I'm sorry. So there are 3 parts, 3 types of supplies which are actually covered by the term exempt supplies. Since exempt supplies includes non-taxable supply also, so let us see what is meant by non-taxable, how it has been defined. Non-taxable supply has been defined by section 2, subsection 78, means a supply of goods or services or both which is not leviable to tax under the CGST Act or under the IGST Act. So these are the important definition, and these 3 expressions, taxable supply, exempt supply, and non-taxable supply, will have to be understood and interpreted in the manner, in the sense in which they have been defined under the respective clause of section 2, which is the interpretation clause. Coming to what has been excluded is value of inward supply on which the tax is payable under reverse charge mechanism. As you are aware, section 9 subsection 3, read with notification number 13/2017 central tax rate, provides for the discharge of the tax liability on certain supplies of services under reverse charge basis. And here the recipient taxable person who is receiving such specified supplies will be discharging the liability. However, it will not be computed in his aggregate turnover. It will be computed in any case, will be computed in the turnover, aggregate turnover of the supplier, though he is not discharging any tax liability on it. Similarly, the taxes which are payable under GST laws, CGST, state GST, UT GST, IGST, or GST compensation cess, these are all the taxes which are payable under the respective GST legislations are required to be excluded from the value of taxable supplies, and therefore it would also stand excluded from the aggregate turnover. Here, one has to keep in mind that only these taxes or sales are allowed to be excluded statutorily. In other words, all other taxes and all other duties, fees, charges, which are actually connected with the supply are required to be included for the purpose of determining the aggregate value of turnover. Kindly bear in mind section 15 subsection 2. That section 15 subsection 2 very clearly provides that any duties, fees, charges, sales, etc., which are actually paid or payable in connection with the supply made by a taxable person will form part of the taxable value, and therefore it will also have to be considered for the purpose of aggregate turnover. Here you may like to understand a bit in detail. You know that in renting of involved property service was also subjected to service tax under the service tax regime. However, there was a specific exemption for property tax, and no tax was payable on property tax. This would not, or stamp duty, which is payable, this would not have become part of the taxable value. Under GST, this has completely undergone a sea change. There is a paradigm shift here, and all such taxes or duties or charges or fees which are actually charged in or in relation to the supply will become includable for the purpose of value, taxable value, and for the in turn for the aggregate turnover. The concept of aggregate turnover, which is actually been introduced in GST regime, is quite distinct and quite wide when one would compare it to the expression aggregate value of clearances or aggregate value used in notification, SSI exemption notification 8/2003 Central Excise or small scale service provider exemption 33/2012. Even earlier, the first notification for small service provider 6/2005, which was later on superseded by 33/2012. In all these are all value of clearance based or the value based aggregate value based exemption given, and the basic purpose is the same. Here, the aggregate turnover becomes an important aspect because under section 22, which is the registration section, there is a threshold of 20 lakhs. And the threshold differs 10 lakh, 20 lakhs, and 40 lakhs. So this registration threshold which is given in respect of the small taxable persons, small taxpayers. Here, it is based on the aggregate turnover. And therefore, this aggregate turnover becomes an important aspect that how to determine that. One important aspect where the current philosophy of GST differs from the erstwhile excise and service taxes, the exports as well as wholly exempt clearances, which were earlier excluded from the scope of the threshold exemption under the erstwhile SSI exemption or service provider exemption in respect of service tax, they are now required to be included under GST for the purpose of aggregate turnover. This is one significant departure. In SSI exemption for small-scale manufacturer, for instance, 8/2003, which ruled the field up to 30th June 2017, the exemption was up to 1.5 crore. And it was subject to the aggregate value of clearances should not have exceeded 4 crore in the preceding financial year. So then subject to that, for 1.5 crore exemption, 1.5 crore first value of clearances were exempted. Now, as far as exports were concerned, whether for the purpose of 1.5 crore, the first exempted clearances, or for the 4 crore, which was the aggregate clearances eligibility criteria, in both the cases, exports were not required to be included. Even deemed exports were not required to be included, whereas the wholly exempt clearances were not required to be included for 1.5 crore. Now, under GST, however, this facility or this benefit is no longer available. For aggregate turnover, I have to include even exports, though I may not be paying the tax when I am exporting under bond and taking the credit, or I am exporting on payment of tax and taking the cash refund under 9610. The philosophy could be GST is fundamentally not only a destination-based consumption tax, it is basically a value-added tax. And this value addition of GST, taxing only the value addition in a given transaction or on a supply, is achieved through the mechanism of the input tax credit, where ITC is allowed to the taxable person on all the inward supplies of the goods or services or both, which is allowed to be set off against the tax payable on the final activity. So it is extremely crucial and essential that a seamless, uninterrupted ITC chain is existing under the GST or VAT regime. And when the exempt supplies are ruling the field or are allowed to be gone out of the aggregate turnover, it would create distortions because the ITC chain may get disturbed. Another very important feature about the VAT or GST philosophy is, which is a very, very important feature, not much thought has gone into it, not much discussion, and that is the neutrality feature or neutrality characteristic of GST. GST or VAT, when I'm talking about VAT, please do not misunderstand it in the context of the state VAT, though it is also following the same philosophy. VAT or GST are normally used as synonymous terms in the international tax jurisprudence. Like, in European Union, it is known as a VAT, what we call as GST. Australia calls it GST. Canada calls it GST. Singapore, New Zealand calls it GST. So, but otherwise, we will not go into the distinction. So, VAT or GST, it is in this sense that I am using here today, both the terms as a synonymous. So, neutrality, VAT or GST is neutral to the economies of scale, the process of manufacture, the profile of the taxpayer, whether it's a manufacturer, service provider, or trader, or whether it's a small manufacturer or small service provider, or a big large scale unit, or the technology by which the product is being manufactured, the nature of the process, the nature of the product, the use of the product, the location of the activity, where the activity is being carried out. So we had earlier the area-based exemption under excise. In GST, such area-based exemption has no place to play because it is a neutral. So keeping this neutrality aspect is one of the reasons whereby it appears that whether it is exports or whether it is wholly exempt clearances, they are all covered within the scope of the aggregate turnover. Next slide, please. Now, as I was mentioning, Section 22 speaks about the registration threshold. There are different thresholds for the suppliers of goods and suppliers of services and for the special category of states and other states. Now, I'm not going into those details. And there in Section 22(1), aggregate turnover expression is used. Clause 1 of the explanation, and which we have already dealt with, it speaks about, the Section 22(1) speaks about aggregate turnover not exceeding 20 lakhs, and which has subsequently been raised to 40 lakhs. And in another cases, it is 10 lakhs. So I'm not going into those details. The question here is, one thing we have to all keep it in mind, that unlike the previous excise and service tax regime, Section 22 subsection 1 speaks about the aggregate turnover in up to which the person is not required to take the registration. And unlike earlier regime, there is no specific notification providing for this small scale exemption. It exempts from the registration control. It does not directly exempt it from the tax. This is not a tax exemption provision. There is no other notification also. What it says is exemption from registration. Since every person who is engaged in the supply, taxable supply, providing taxable supply of goods or services or both, is compulsorily, mandatorily required to be registered, it goes without saying that when I'm saying that I'm exempted from the registration control, it presupposes that I'm also exempted from the payment of tax also. But earlier, the statute itself, neither the act nor the rules provided for under excise and service tax directly from the exemption from the registration control with a threshold limit. It was always provided through the exemption notification. And because one was exempted under 8 by 2003 or 33 by 2012 service tax, therefore one was not required to obtain the registration under the previous regime under the respective statutory provision. So again, there is a slight departure from the previous regime. Clause 1 of the explanation says, this is explanation at the end of section 22. For the purposes of this section, the expression aggregate turnover shall include all supplies made by the taxable person, whether or on his own account or made on behalf of all his principals. Here, it seeks to explain the scope of the aggregate turnover. However, it does not mean that this explanation, which is appended at the end of section 22, will prevail upon the definition of aggregate turnover as given under section 2 subsection 6. This is not an independent definition to be preferred over the main definition under section 2 by section 6. It only seeks to further amplify or elaborate upon the scope of the expression aggregate turnover as defined under section 2 subsection 6. And it says aggregate turnover shall include all supplies made by the taxable person, whether on his own account or made on behalf of all his principals. The purpose or the intent behind this explanation is that if a person is acting in the capacity of agent for a principal, then whatever turnover he is making as agent on behalf of his principal will also be included in the aggregate turnover of the agent only. Whatever he is making, so whether I make my turnover in my own capacity as an independent, or whether I'm acting as an agent on behalf of another principal, the turnover will be computed which I am making on behalf of principal. It will be included into my turnover and not my principal turnover. Clause 2 of the explanation says, there are two clauses in this explanation. Clause 2 says, the supply of goods after completion of job work by a registered job worker shall be treated as the supply by the principal referred to in section 143, and the value of such goods shall not be included in the aggregate turnover of the registered job worker. As you are aware, friends, section 143 regulates the movement of the goods which are intended or which are to be sent for the further processing on a job work basis by a principal taxable person to another person who is a job worker. And it allows this movement of the to and fro movement of the goods without payment of tax. And finally, on the entire, no doubt, on the job charges, whatever job worker is required to pay as per the law, that is a different thing. The question here is, this clause 2 seeks to actually slightly dilute the blow of this or double taxation. It says that when a principal A sends the goods to the job worker B, and when the job worker B again sends back the processed goods to the principal, the value of the goods, processed goods, will be included in the principal's value and not in the job worker's value. So total value of the goods which are processed by the job worker will be included in the value of aggregate turnover in the hands of the principal and not the job worker. This is the scope and meaning of the aggregate, this particular clause 2. Coming to the aggregate turnover and composition scheme, section 10, as you are aware that it provides for the composition levy for the small turnover, for the small taxpayers who are actually expected to be relieved of the major compliance burden. Here also, the eligibility threshold for under composition scheme is aggregate turnover in the preceding financial year not exceeding 150 lakhs. And then for certain Northeast and other states, this eligibility is 75 lakhs. Next. Explanation 1 to this composition scheme section 10 says, aggregate turnover will include value of supplies made from 1st April of a financial year up to the date of becoming liable for registration, but to not include value of exempt supply of services by of extending deposits, loans or advances insofar as the same is represented by way of interest or discount. Now, the one important aspect all of you will have to keep in mind is that this particular section 10 in the opening part uses the expression aggregate turnover, but when it comes to the prescription of the rate of tax which is payable by the composition supplier or composition dealer, with a term with which all of you will be much more familiar with, the composition dealer. Here dealer means not only trader. I am saying composition dealer means composition taxable person under section 10. Now that if you see there, the term used is turnover in state or turnover in union territory, but the threshold limit is in the context of, is in terms of the aggregate turnover, but tax which is payable is in the context of turnover in state or turnover in union territory. Now what does it say? Explanation 1, that if somebody has become liable for registration during the middle of the year, then still for the purpose of composition scheme and the threshold of 150 lakhs, whatever value of supply he has made when he was not liable from 1st April of a financial year till the date of his becoming liable will be required to be included. However, for a turnover in a state or turnover in union territory, where he is actually discharging the liability, those supplies which he has made when he was out of registration, that will not be computed for that purpose. So tax will not be levied on him for the past supplies. However, for aggregate turnover, he will be required to include the supplies on which he has not paid the tax because he was under that threshold. This is one part. Both the explanation seeks to exclude the exempt supply of services by way of extending deposits, loans, or advances insofar as the same is represented by way of interest or discount. I will come to this particular part in a while when we deal with the issues. The different rates which are prescribed under this scheme are for the manufacturers 10(1)(a), restaurant 10(1)(b), and other suppliers. I have put a word outdoor caterers. Here I'll just touch upon one aspect. There has been right from the day one, from 2017 July 1st, when GST was introduced, under composition scheme, it has been continuous view of the, or whether it is a policy of the government as announced time and again, and even through the board circulars, clarification, and accepted by everybody in the country, that as far as the service providers are concerned, it is only the restaurant which are covered under the composition scheme and no other service providers. This was the view taken by everybody, and government has also been harping upon the ministry as well as the board also. Was it really so? In my humble opinion, if you carefully read section 10(1)(b), it does not provide for the composition rate of tax in respect of restaurant by any description. It says in respect of the services, supplier of the services which are covered by clause B of entry 6 of schedule 2. And as you are aware, section entry 6B of schedule 2, which is a categorization schedule, it only speaks about the supply of food or drink, etc., what we call is as a catering or the restaurant. It does not even anywhere uses the term restaurant or the place where it is being served. It only describes the nature of the activity or transaction undertaken. There is no mention about who is undertaking and where it is being undertaken. So that clause 6B equally applies to outdoor caterers, because the activity of outdoor caterer is akin to restaurant, and as far as the entry 6B is concerned, it is covered within the scope of. So it has been my consistent view, and it is my personal humble view, that all along composition scheme is and was always available to outdoor caterers, and it's also available today to the outdoor caterers. Next. Coming to the issues which arises for consideration, whether the aggregate turnover and or turnover in a state or turnover in union territory would include the exempt supply, as we have seen the definition under section 2 subsection 6 and section 2 subsection 112, it would include the exempt supply also. Whether it would include the value of the taxable supply or the turnover of the activities or transactions covered by schedule 3 I will come to that separately in a few minutes. I will just leave aside this question for the time being. Whether the taxes, duties, cess, fees, etc. levied under any other law other than GST law would be included for the purpose of aggregate turnover or turnover in a state, etc. The answer is yes. We have already seen that only exclusion is provided in respect of the taxes are those taxes and cess which are paid or payable under the GST laws. Whether a registered trade person, taxable person will be eligible for threshold limit of rupees 40 or 20 or 10 lakhs if he has exceeded the limit in the preceding financial year. This is very interesting because unlike the previous regime, as I was mentioning earlier, under GST, the preceding year turnover criteria is nowhere applicable. The exemption is not based upon whether in the preceding financial year the taxable person has exceeded a particular threshold limit or not. In other words, even if one has exceeded the turnover of say 1 crore in a preceding financial year, in the next financial year, in the new financial year, he can still stake his claims to the threshold exemption of 40 lakhs or 20 lakhs or 10 lakhs. This is unlike the previous situation. Previously, where the philosophy was. And another interesting question, because this question may also again arise in the context of GST, though it is fairly settled as far as the service tax is concerned. So I have decided to deal with it. Whether the small business exemption will be available separately to the co-owners of a property if the rent is collected together and then divided amongst them. There is a common practice followed everywhere where there are co-owners of a particular property which is rented out on which GST is payable, earlier service tax, and where each and every co-owner would be accounting for the rent of based on their proportionate share in the property. They would be actually declaring it as their own personal income, and everybody would be claiming the exemption is available. In the context of service tax, this had become a boiling issue because the department wanted to treat it as a one single transaction and thereby denying the exemption to everybody independently. This matter had gone up to the tribunal and to High Court as well. It is fairly settled, but in the context of GST, in one of the recent judgments of Ilam Brancheri Khadum, Advance Authority ruling has followed one of the judgments in the previous service tax regime and has held that in such type of cases where there are co-owners of the property, where the rent is collected together or accounted for together and which is divided thereafter amongst them, which they ultimately present reflect in their independent annual accounts filed with the income tax return, then everybody will be entitled for the separate exemption threshold. This is under GST. In fact, in service tax, some of the citations which have fairly settled this law are Anita Singh, 2018 TIOL 2164, State Delhi. Sarojben Khushal Chand, 2000, this is Ahmedabad judgment, bench 2017 TIOL 2284, State Ahmedabad. Sri S. Abdul Haq and others, 2018 TIOL 3852, State Madras, and Srimati Rajeshwari Coimbatore, 2020 TIOL 3283, State Madras. In couple of these judgments, particularly Rajeshwari and Sarojben Khushal Chand, these judgments also, the department later on had changed their track and they wanted to treat this as a combined turnover on behalf of one single transaction by treating all these co-owners as by treating them as an association of persons. And so they had changed the track. In two of these judgments, the concept of association of persons has also been very clearly discussed, and taking cue from the income tax perspective, it has been very clearly held that as these cannot be treated, these co-owners of the property with individual shares therein identifiable share cannot be treated as an association of persons. So they would still be entitled for the independent exemption. You may want also refer to Section 26 of the Income Tax Act in this regard, which says that where there is a property which is consisting of the land or building owned by two or more persons and their shares are definite and ascertainable, they should not be assessed as association of persons. CBDT circular number 7515 also says that the TDS limit will be independently applied in these type of cases. And finally, whether a composition taxpayer is liable to pay tax at the prescribed rate in case of wholly exempt supply, I am afraid it is so, because once a person has opted for the composition scheme under section 10, then a particular supply which might be exempted under a different notification will indirectly, by implication, will lose the benefit, and the person will have to pay the tax at the prescribed rate even on the exempt supply. And therefore, it would be essential that in case one may have to look into when a person is engaged in, say, two supplies, one is taxable and another wholly exempt, and is exempt turnover, turnover of exempt supply is likely to be substantial, then in that case, it might be worth looking into whether that exempted turnover can be shifted to another legal entity, a separate entity, and the composition scheme benefit is availed only in respect of taxable supply only. One may have to look into this. Next. Friends, I would be dealing with the questions at the end of the session only, so as not to break the flow. Coming to the Hello? Hello? Yeah, sorry, something went off. Coming to now the concepts of taxable supplies, exempt supply, and non-taxable supply. Taxable supply means supply of goods or services or both leviable to tax under the Act. Meaning of the word leviable, it is very important. That which may be levied, that which is proper or permissible subject for levy, as levy of interest in land. This is how the Black's Law Dictionary has defined it. Advanced Law Lexicon also defined it in the same manner. Exempt supply, we have already seen that it attracts nil rate of tax. Supply of goods which are supplies which are exempt under by a notification under section 11, and non-taxable supply also. Next, non-taxable supply has been defined as supply of goods or services or both which is not leviable to tax under the CGST Act. Now, and there is a concept of zero-rated supply. Before I deal with non-taxable and taxable supply, let me deal with zero-rated supply and exempt supply. The distinction between exempt supply and zero-rated supply fundamentally revolves around the ITC availment. In both the cases, in case of zero-rated supply, also suppose when the exports are made under bond, no tax is paid. When the supplies are made under an exemption notification, no tax is paid. However, in case of exempt supply, ITC benefit is completely lost or proportionately lost, depending upon the profile of the taxpayer and what activities he has engaged into. In case of exports under bond, though the tax is not paid, his right to claim the ITC remains intact, and of which he can claim the refund under section rule 89(4) of the CGST rules. He can also make the payment exports on payment of tax by utilizing the ITC and claim the refund under rule 96 of the CGST rules. This is the basic distinction. There are a couple of other points of distinction, but this is the fundamental distinction. Coming to the non-taxable supply, the first question is whether the exempt supply would include the value of activities, transactions specified in Schedule 3 or not. As you are aware, friends, Schedule 3 specifies certain transactions or activities which are to be considered neither as supply of goods or supply of services. Whether they can be treated as a non-taxable supply, that is a fundamental question. Because if they are considered as non-taxable supply, then they would definitely get included in the aggregate turnover. Now, going back to the second bullet in this page, supply of goods or services or both which is not leviable to tax under the CGST Act or IGST Act. This is how the non-taxable supply. The important word is leviable to tax. We have already seen the Black's Law Dictionary meaning that leviable is something, is a matter or subject which is permissible to be levied, which is permissible, on which it is permissible to levy. So unless and until something is permissible to bring to tax within the scope of the law, can it be said that it becomes a non-taxable supply because the tax is not levied? There is no question of excluding something unless it is included or includable. I'll try to explain you this with the example of sale of land, which is figuring at entry number 5. Sale of land and sale of building, other than under construction building. There was an apprehension when the law was introduced, model law was discussed, that because services are being defined as services means anything other than goods. Therefore, if the immobile property transaction, if the immobile property transactions are not excluded, then they would get taxed under services. This was the apprehension expressed by everybody across the country. In my humble opinion, this apprehension was completely unjustified and unfounded. There was no need to worry on this count, because even if sale of land or sale of building, and for that matter, any immobile property, would not have been specifically excluded from the scope of the or put under chapter schedule 3, it could not have been subjected to tax under the supply of service category. For that, one has to refer to Article 246A, which provides the mother source for the legislation, for the legislative powers for the levy of GST. It speaks about union and the state have got, union legislature and the state legislature have got power to make the laws for the levy of GST on the supply of goods or services or both. Article 366 clause 12A defines the goods and services tax as the tax which is levied on the supply of goods or services or both. The thrust here, the emphasis here is on the supply of goods or services or both. The very constitutional framework brings within its sweep, within the scope of the levy of GST, only goods, services or both, and not the immobile property at all. As you are aware, Article 246, which provides for the taxation and legislative powers between of the union and state through the Schedule 7, Union List 1, State List 2, and concurrent list. Here, entry 18 and entry 49 of state list still talks about the retains the legislative powers in respect of land and building, and tax on land and building in the hands of states only. Union cannot encroach upon it. And though Article 246 is overriding, it starts with the non-obstante clause that notwithstanding anything contained in Article 246A and 254, in my opinion, it does not matter. It cannot still bring the immobile property transactions within the scope of the GST, because that non-obstante clause or overriding nature of Article 246A will come into play only in respect of that subject matter which is already capable of being included within the scope of the Article 246A or GST. If something is not capable of being included within the scope of GST, then Article 246A will not prevail upon Article 246. In other words, in respect of the transactions, legislative powers and taxation powers in relation to land and building and other immobile property, which are still retained with the states only, even after introduction of GST, they remain unaffected even after introduction of GST. That being the case, even if sale of land and sale of building in particular, or for that matter, other immobile property transaction, including the benefit arising out of the land, like FSI, TDR, etc., development rights, etc., these could not have been subjected to tax under GST, even if they had not been mentioned under Schedule 3. At best, I would call it an abundant precaution by which legislature has put it. But that will not make it a non-taxable supply, because it is not leviable to tax. And what is leviable is something which can be brought within the scope of the levy. If something cannot be brought within the scope of the levy, it cannot be subjected to tax. It has been which is permissible to levy. Suppose sale of land would not have been mentioned in that Schedule 3, whether the tax would have been attracted? The answer is no. For the purpose of levy, levied, imposition, and collection, one may refer to, I would like to go into, one of the important judgment on this is Somaya Organics 5 SCC 519. In this, Supreme Court larger bench has actually brought out the distinction between levy, assessment, and collection. The court says the words levy and collect are not synonymous terms. Levy would mean the assessment or charging or imposing of tax, whereas collect in Article 265 of the Constitution would mean physical realization of tax which is imposed or levied, and collection is at a stage subsequent to the levy. Like in excise, levy is attracted as soon as the goods are manufactured, but the collection is at the stage of the removal. So levy and collection, and levy includes assessment, but levy does not include collection. This is the important aspect. I'm not going into too detail on this. This is some fundamental concept which probably can be dealt with in a much detail some other time. But just bring these particular aspects in mind. Even in Lakshmana Sinoi case, Supreme Court AIR 1954, Supreme Court says the words levy, assessment, and collection include all the processes by which the tax is ascertained, demanded, and realized. These are all three independent terms. In S.K. Patnaik, 1 SCC 413, Supreme Court says, while the expression levy may include both the process of taxation as well as determination of the amount of tax or duty, the expression collection means actual collection of the payable duty or the tax. Therefore, in my humble opinion, Schedule 3 transactions or activities cannot be brought within the scope of non-taxable supply, and it cannot be brought within the scope of exempt supply, and therefore they cannot be included in aggregate turnover. The another aspect is Section 17.3. If you see, Section 73, which provides for the block credit and proportionate credit, it says for the purpose of determining the value of exempt supply, the value of sale of land and sale of building and transaction in security should be included. If the sale of land is already covered within the scope of exempt supply because it is non-taxable supply, there was no need for this specific naming inclusion in the exempt supply, because in any case it was included. This further fortifies the view that Schedule 3 activities are not covered within the scope of non-taxable supply, and therefore it cannot be brought within the scope of exempt supply and then included in the aggregate. The same logic will prevail for the purpose of alcoholic beverages for human consumption, which is constitutionally outside the purview of GST altogether. It is not leviable to tax under GST. Petroleum, crude, petrol, the 5 petro products which are right now kept outside the purview of GST, though not constitutionally. But what it says, the GST Council can only notify from which date it would become liable to GST. And mind you, there is no specific nil rate even prescribed for these 5 petro products under GST. This is very interesting. Nil rate is a tariff rate. So if the nil rate is also not prescribed, these 5 products also cannot be considered as otherwise leviable to tax, and therefore, in my humble opinion, they also go outside the purview of the non-taxable supply. Next. I've dealt with in electrical energy, you will find heading 27160000, the unit is mentioned as 1000 kWh. Very interestingly, notification 12/2017 prescribes the nil rate for the electrical, not entry 227, serial number 104 of notification number 2/2017. It prescribes nil rate for the electrical energy. What I am finding, I'm quite baffled and surprised when there is no rate prescribed for electrical energy. Where is the question of prescribing granting the whole 2/2017 is a exemption notification. It is not prescribing the tariff rate. It is a exemption notification. When there is no rate of tax prescribed for electrical energy, where is the question of granting whole exemption? There is some anomaly here which may have to be looked into by the policymakers. Coming to interest on loans, advances, or deposits, this has also been one of the burning issue, particularly after these 2 AAR ruling, where they say that it should be included in the aggregate turnover. In my humble opinion, if you read very carefully, serial number 27 speaks about the exempt services by way of advancing money, that is lending money in the form of loans or advances or deposit where the consideration is represented by interest or discount. Now, what is being exempted? Section 11 can only exempt supply of goods or supply of services or supply or both. Is the interest on loans or advances or deposit is a service or whether it is a consideration? Consideration can be exempted. It is an abatement. This is basically an abatement entry. It is not an exemption entry. It provides for the abatement in respect of the consideration in the form of interest on loans. How can the services of advancing money in the form of loans can be exempted? Can these services come within the scope of the taxability at all? This is the question we have to ask. Because services and it excludes transaction in money. So when the loans or advances or deposits are being made or monies are being advanced, isn't it a transaction in money? And assuming the lending itself is a service, then also can the lending of service, this is one aspect, isn't it a transaction of money? If you friends recall, in service tax for banking or other financial services, what was being exempted or what was being charged to service tax was the services in relation to lending, not lending per se. And if therefore, the very entry 27 using this phrase that exempting services by way of loans, advancing the money by way of a loan itself is misnomer and it is completely invalid entry. It is lacks the legislative competence in my opinion, because the services of advancing money by way of a loan itself cannot be treated as a taxable. Then where is the question of actually exempting the consideration on that? Because the consideration is in the form of interest, but the basic service is not liable to tax. This is the proposition which may have to be tested in the court of law. Next. Liquidated damages. Friends, this is one of the major issue. The two aspects we will only keep it in mind. Section 7, subsection 1A, as amended retrospectively, inserted with retrospective effect by the CGST Amendment Act 2018. It was the enactment became effective for this purpose on 1/2/2019. But this particular insertion of clause 1A and the deletion of the erstwhile clause D was done retrospectively from 1/7/2017. It says where certain activities or transactions constitute a supply in accordance with the provisions of section 7(1)(a), they shall be, or clause A, they shall be treated either as supply of goods or supply of services as referred to in schedule 2. Next. For the purpose of present discussion, we would be concerned with entry 5E of schedule 2, which says supply of services, the following shall be treated as supply of services, namely agreeing to the obligation to refrain from an act or to tolerate an act or situation or to do an act. Next. Next. Say the next, please. Yes. As you are friends aware, liquidated damages, forfeiture of deposit in respect in case of cancellation of any particular booking like hotel booking or otherwise, penal interest which are being charged by the banks and financial companies on account of the late payment or the foreclosure charges or early termination charges have been subject matter of the dispute, whether these can be treated as subject liable to GST or not, whether it presupposes an obligation to tolerate an act or situation or not. This is the sum and substance. And there is a lack of clarity on this issue, and there have been a lot of controversial rulings of the AAR. We'll deal with this next. As far as the legal position is concerned, it would be interesting to know that a similarly worded clause was there in subclause E of section 66E, which was a declared service. If you compare 66EE with the present 5E of schedule 2, both are identically worded. Please keep it in mind. Next. What is, however, important is under the service tax, it was declared as a service. So it was a deeming fiction. And in that context, the issue had arisen whether this can be subjected to tax or not. whether this deeming fiction would come into play in respect of, say, liquidated damages or cancellation of booking or such foreclosure charges, such charges or not. In particular, Jaipur Jewellery Show, it was a case of the cancellation of the advances given by the party for the jewellery exhibition. When the money had been refunded, the tribunal came to the conclusion that this cannot be treated as a service and therefore this was held to be not liable to service tax. In KN Food case, it was a case where a lesser work had been allotted to the job worker against the contractual obligation, and principal had actually given some ex gratia job charges because of the grant of the lesser work to the job worker. He had compensated him. And in KN Foods, the tribunal came to the conclusion that this is not liable to the GST, the service tax, I beg your pardon. In Repco Home Finance, this is Amit Metallics is another judgment where there was a settlement agreement between the party for the termination of a development agreement. It was a property development agreement. And because the purchaser who had purchased the property and the seller could not fulfill his part of the obligation, there was a settlement which was raised. And in terms of that settlement, certain amounts were paid to the purchaser of that property. And this additional claim, which was treated as a compensation by the tribunal, and in Amit Metallic's case, this was held to be not liable to service tax. In Repco Home Finance, this is a recent judgment of the Madras. This is a larger bench decision, very important decision. Please read through this decision very carefully. It discusses many salient aspects and very important concepts. It's a very lengthy but very, very good read, I would say. And here, the larger bench has made a very finer distinction between a consideration for a contract and the condition for a contract. There is a difference between the consideration and contract. And it says that when there is a damages which are recovered for the foreclosure of loan, it cannot give rise to a consideration. Such foreclosure charges are prescribed in the provided for in the agreement so as to lend the certainty to the agreement, and it is recovered for the disruption of service and not towards lending of service. Service has already been lent by the bank, by the finance company by advancing the money. When the customer forecloses the loan and foreclosure charges are recovered from him, in that case, he is basically terminating the contract prematurely for which the charges are recovered by the financial institution. And therefore, this is for the disruption of service, not for giving the service or lending the service. In fact, the tribunal in para 44 says that foreclosure is an antithesis to the lending. And here it cannot be said that a contract can give an option. A foreclosure related clause in the contract does not give an option to the party to violate the contract. Nobody can enter into or nobody enters into a contract to violate the contract for which the charges may become payable. Two parties, every single contract has some do's and don'ts. Every single contract has some covenants, few covenants and few terms, as has been held by the Supreme Court. Every covenant and terms of the contract does not become an independent contract. I repeat, every term or contract or every stipulation in the contract itself does not constitute a separate contract. And therefore, one has to, the conclusion, this particular line of thinking that supports the view that foreclosure charges on the same footing is the liquidated damages, which are generally becomes payable on account of the delayed execution of the work or faulty deficient execution of the work or other non-adhering to the conditions of the contract either by the client or by the contractor. When the damages are required to be paid, they cannot be considered as an independent supply by bringing it within an obligation to do an act. So under service tax, the view has been fairly consistent that they do not attract the levy. And this is despite the fact that obligation to do an act, etc., was a deemed service under section 66A as by way of declared service. Next. However, under GST regime, which also employs the same clause under entry 5E, whether the same conclusion can be reached or not is an important question. Friends, in my opinion, first of all, we have to keep it in mind that Schedule 2 is not a deeming fiction. Schedule 2 is merely a categorization or classification schedule. It was never a deeming schedule. It was never intended to be a deeming schedule. It was never a deeming provision. This is one fundamental mistake which large number of taxpayers and tax officers and tax professionals have made right from the day one. I'm sorry to say. Everybody had considered, almost majority of the people have considered Schedule 2 as a deeming provision. If Schedule 2, first of all, please understand Section 7(1)(a), which defines the supply in an inclusive manner, has two prerequisites before a supply becomes taxable supply. One is business, another is consideration. Existence of these two elements is a must before a particular supply can be subjected to levy of tax, unless it is specifically dispensed with. So under Section 1(b), the business criteria has been dispensed with if the supply of services is in the nature of import for a consideration. Then even if it is not for a business, it will still be treated as a supply and can be brought to the levy. Under 7(1)(c), consideration has been dispensed with in respect of the activity specified under Schedule 1. And Schedule 1 starts with the deeming provisions that the following transactions or activities shall be deemed to be a supply, even though there is no consideration. Whereas Schedule 2 does not speak about any deeming effect. It does not give it is not in the nature of deeming provision at all. This has been made very clear by the board, by the legislature through the retrospective amendment by deleting clause D, which was very poorly worded, which had led to all this confusion, and by replacing it with clause 1(a), capital A. 1(a) says if any activity or transaction is a supply in terms of clause A, then it shall be classified, categorized as supply of goods or supply of service in terms of Schedule 2. So first, one has to get over the barrier of the supply under Section 7(1)(a). If Schedule 2 is treated as a deeming provision, then very anomalous and the absurd result may follow that even if there is no consideration in respect of the activities which are enumerated under Schedule 2, still it would become liable to tax. Can this be the intention? Or even if there is no business, even if the transaction is not in the course or furtherance of business, merely because it is mentioned under Schedule 2, can it be subjected to tax by treating it as a deeming provision? It was never so, it can never be so, considering the present scheme of the things. And therefore, this clause will also have to satisfy the test of the Section 7(1)(a), clause 5(e), agreeing to the obligation to refrain from an act or to tolerate an act. This brings us to the question whether to tolerate an act like I am actually tolerating your deficient supply of service or delay in execution of the contract by accepting the liquidated damages from you. Can it be said that there is a toleration, this tolerating this situation, this delayed execution of the contract itself is a supply? This is the answer we have to ask ourselves. And there's a question we have to ask ourselves. Next. In all this AAR ruling, which is pre-amendment Section 7, all these cases, either liquidated damages or compensation for the surrender of the tenancy right as it happened under Javer Sankarlal Bhanushali, liquidated damages under Maharashtra Power Generation Company, the penal interest under Bajaj Finance, other liquidated damages in case of North American Coal. Dorela Industrial City Development was a case where there was an arbitration award in terms of which the money was received by the party. Rashtriya Ispat Nigam Limited is again a liquidated damages. In all these cases, a common thread of the reasoning or the basis, a common thread which ruled all these decision of the advance authority where there is that entry 5(e) the tolerating a situation, an obligation to tolerate an act or situation based on that. However, apart from the fact that on its own also these rulings are absolutely improper, I mean not correct an erroneous ruling completely, going against the very basic scheme of the statutory provisions. After the retrospective amendment of Section 7, in my opinion, these rulings have no applicability, have no relevance whatsoever. It has no binding effect in otherwise for other third party, but in any case, now they have lost all their relevance after the introduction of Section 7(1)(a). Next. Coming to, I have covered this. Next. It would be interesting to know certain international jurisprudence on this, because this similar expression one would find under the community law or the EU weight law, European Union weight law, under the 6th directive, and same obligation to do an act or to refrain from an act. One of the celebrity case on this is the Societe Thermal. This was a case where European Court of Justice said that in respect of the forfeiture of the deposit for the cancellation of hotel accommodation cannot be subjected to the levy of VAT. However, this judgment, which had been actually like the Card Protection Limited case, composite supply case of the European Court of Justice, which had become the searching, the guideline, guiding searchlight for the whole approach. Even today also, Societe Thermal also had been a guiding searchlight in the matter of such type of transactions. However, in case of Air France case, European Court of Justice suddenly took a very interesting different view, and it said that on unused air ticket, which is either non-refundable on account of no-show by the passengers, or where it is refundable but passengers after no-show have not claimed the refund, the VAT or GST is payable. The ECJ emphasized that the very right is created in favor of the passenger when he books the ticket in the airline, whether he avails the benefit associated with that by flying the airline or by flying or not, that is not the relevant thing. So the actual performance by the passenger is not relevant, and therefore the right is created, and once that right is created, it is crystallized and the liability to VAT arises. A similar view has been taken recently, afterwards by the High Court of Australia, when they overruled the full federal court judgment in favor of the party in Qantas Airways Limited, and forfeiture of deposit in case of the unused air ticket was held to be taxable by the High Court of Australia. Again, in Reliance Carpet, the judgment had gone in favor of the party till the full federal court. It was a case of forfeiture of deposit in case of sale of real estate subsequent to the rescission of the contract. Right? It had gone in favor of the party. However, thereafter, Australian High Court overruled that decision and held it in favor of the revenue. And the latest two judgments on these are by the European Court of Justice in MEO Services de Comunicações of Multimedia, that is 22nd November 18, and Vodafone Portugal case, which is decided as recently as 11th June 2020. These are two important, very, very substantial, important judgments where the early termination of the subscription, there were low telecom services which both the companies have been providing. The various services were provided at a very low cost, low charges, subject to a minimum commitment period. The customers who had actually terminated the subscription before this minimum commitment period, they were required to actually damages or compensation were recovered as per the agreed formula as per the agreed measure in the contract. This was held to be liable to VAT in European Court of Justice, these two latest judgments. And these judgments probably may see lot of discussion, lot of analysis, and lot of disputes in the coming year. So on one side, we have a Societe Thermal judgment. On other side, we have a group of judgment of Air France and Qantas. On another side, we have a Reliance Carpet judgment, and a fourth group is of. These are basically are going to decide, because the discussion and analysis, whether it is in favor of the revenue or against the revenue, the discussion and analysis of this entire leviability of VAT in this type of charges, which are in the nature of forfeiture of deposit or liquidated damages or otherwise, these are going to decide. They will become extremely relevant even in the Indian context, as I see that. Next. After this Vodafone and MEO judgments, the Her Majesties of Revenue and Customs, that is UK, they in fact revised their guidelines. It is something akin to our CBIC. They have revised their guideline also. And there are continuous three circulars have been issued by them on these early termination fees and compensation payments. So the battle will continue, it seems. There is another interesting judgment of the New Zealand court in Interchase Corporation Limited, and where they have said that where there is a judgment fee which is actually received by the party, that as a result of the court order, it cannot be subjected to the levy of tax. There is yet another judgment of the Shaw versus Director of Housing and State of Tasmania. This is Supreme Court of Tasmania, that is an Australian court. So these are certain relevant, important judgments which may become the ratio, the discussion therein, and the observations therein, like card protection, may become quite relevant in the context of deciding the leviability of liquidated. Though I may say liquidated damages, though I may say that today the Indian GST law is sitting slightly differently worded. It is important to note that the Schedule 2 is not a deeming fiction, and obligation to do an act is finding mention in Schedule 2 and not in the body of Section 7. Had it been included directly by way of a deeming fiction or inclusive part under Section 7, the matter could have been different, as is the practice in the other international tax jurisdictions. We'll have to see. There could be some amendments in the coming year. Next. Yes, next. Friends, this is another burning issue. I need not speak about what are the provisions and all. We are all aware about that availability of ITC is subject to certain conditions, and the 4 basic conditions which are prescribed are under subsection 2. And the third condition, that the next page, subject to the provisions of section 41 and section 43A, the tax charge in respect of such supply has been actually paid to the government by the supplier. This is this condition which is causing hard ones to everybody, and this has become a subject matter of court dispute, particularly when every single hour, now it is not even weekly or monthly, practically every hour, where new fraud cases of ITC fraud are actually surfacing across the country. This condition has become very important. Another reason this condition may become very important because of the COVID-19 pandemic situation and the aftermath of COVID, because particularly MSME sector between themselves as well as a suppliers to the large business unit. Next slide, please. As a suppliers to the large business units, they may find themselves going back on their tax liability, and if they do not pay the tax, genuinely, I'm not talking about any fraud. So if they do not pay the tax, then the supplier, whether supplier is also MSME or whether supplier is the large business unit company, they may lose the benefit of ITC. So in coming days, acute pain and dispute may likely to be witnessed by all of us on this particular condition, section 16(2)(c), which says if the supplier does not pay, then the buyer cannot avail the credit. Yes. This issue, what we have to look at whether what is the constitutional validity of the provision. Friends, please bear in mind that neither excise nor service tax had ever such provision where the supplier or the service provider, if he has not deposited the tax, the buyer would be disallowed the credit. This was never a case as far as the service tax or excise was concerned. This clause has been actually by force has been introduced in the GST at the state's insistence. Though the center probably was not very much inclined and enthusiastic to have this clause in the statutory provision at all. You know that Bombay High Court, it all started with the Mahalakshmi's case. And then all the state weight laws have made their respective provision. A challenge to this type, the more or less identical or analogous provision under the state weight laws have come across before the different high courts across the country. They are still coming up in different high courts. And in all these judgments which I have cited of the different high courts, the unequivocal, the consistent view of the high court is that for the fraud or fault committed by the supplier, the buyer cannot be disallowed the benefit of the credit or set off or whatever you call it. These are all weight judgments. One of the important judgment is that Gerulal Balchand, which is the Punjab and Haryana High Court judgment 2012 to SCC. Very pertinent observations have been made by the Punjab Haryana High Court in this particular judgment, where they say that a law does not compel somebody to do the impossible. The fundamental proposition in all these judgments which endorses or reflects the view which has been consistently taken by European Court of Justice also in these citations which I have cited, joint cases of Optigen and joint cases of Excel Kittel. In all these judgments, what is the fundamental view? Unless the complicity or the involvement of the buyer in the fraud being committed by the supplier or any misdeeds of the supplier is established, merely because the supplier has run away or supplier has not paid the tax or supplier has committed some other mischief or fraud, buyer cannot be disallowed the credit. This is the sum and substance, a consistent view of the European Court of Justice, and which is also reflected in all these judgments which I have cited. There are recent judgments of the Arise India also, then Vinayaka Agencies, Gujarat High Court in Modi Oil Industries case, then there is a Jharkhand High Court in Tata Motors case. There is these are all the judgments where the similar views have been Arise India and other cases. Next. So before that, yeah, keep it as it is. So the friends, in the earlier previous one, section 16(2)(c), there are already the challenges have been, I think, in Delhi High Court and Kolkata High Court, the challenges are pending. Across the other high courts also, probably this particular provision validity is being challenged. And I would be very surprised if this particular provision would pass the muster or sanctity, whether it will have a sanctity in law. It is therefore, in my opinion, this is an ill-conceived provision, placing an onerous and impossible burden on the buyer and recipient to ensure the tax payments by the seller or supplier to the government treasury, and it may not stand the scrutiny of law. Going by the order. Fraud is a different matter. If the buyer is found to be involved in the fraud, and GST is a very fraud-prone tax, again, it's a very different topic. There are more than 10 types of, maybe around 12 to 13 types of different frauds which are being which have been tabulated, which are experienced by the international, weight jurisdictions also, different countries. It is not only in India, but then that's a different subject. But whatever it may be, a buyer, a bona fide buyer cannot be disallowed the credit on account of the fault, misdeed, or fraud of the supplier. This is the consistent view which is reflected in all these judgments and also expressed by the European Court of Justice. Coming to the time limit for availing ITC. Apart from section 16(2), section 16(4) also puts another restriction on the availment of credit in the form of time limit. This time limit, it says there are two dates, alternate dates. One, the due date for furnishing annual return or due date for furnishing the return under section 39 for the month of September of the following financial year, whichever is earlier. That would be the last date. In other words, if for 1920, if annual return is filed, say on 1st December 2020, for 1920, last financial year, but the annual return, monthly return, here the monthly return is 3B, it is treated, I'll come to that. If the 3B, which was required to be filed on 20 October 2020, therefore, for 1920, the time limit for availing ITC in respect of any invoice or debit note for 1920 stood expired on 20 October 2020, which is earlier of the two dates. This is the common understanding and the plain meaning of this section. But is it really so? Let us see that. Next. First of all, one important point which is required to be taken into account is section 16(2) is overriding other provisions, but section 16(4) is not carrying any non-obstante clause. Section 16.4 is independent, but Section 16.2 overrides the provision. In fact, it starts with the non-obstante clause with these words. It says that Section 16.2 says, notwithstanding anything contained in this section. So if the one view that can be taken is, once I have complied with the 4 conditions of Section 16.2, the time limited related Section 16.4 condition cannot prevail upon Section 16.2, even if I might have missed the time limit as per 16.4. This is one view. Going forward, the date which are to be compared by me for the determination of my last date for taking the credit is furnishing return for September under Section 39, September of the next financial year, or annual return. As far as due date for annual return is concerned, there is no difficulty. But what about September under Section 39? Friends, you are aware, Section 39 is GSTR 3. GSTR 3, like GSTR 2, is already under suspension. It is not operative at all. 3B is introduced, and there have been a subsequent continuous amendment. The question here is whether 3B can be said to be in lieu of 3 for the purposes of Section 39 and other relevant provisions, including 16.4. The latest amendment came to be made by 49/2019, dated 9th October to Rule 61.5, and it has been made retrospectively from 1/7/2017. The intent and purpose for making this amendment retrospective to Rule 61.5 is to basically grant the status of 3 to 3B. The validity of this rule is already under challenge, and it is debatable whether this retrospective amendment is valid or not. Because when 1/7/2017 original text of Rule 61.5 clearly said rule written in form GSTR 3B in lieu of form GSTR 3. However, immediately after 20 days, the legislature through GST Council decision had substituted the said Rule 61.5 and in lieu of form GSTR 3 were omitted. It was only expected to be a temporary affair. It was never expected to be a substantial return like GSTR 3. Council never had, and therefore the in lieu of words were omitted, and the rule was, Sub-Rule 5 was amended. For 2 years, they did not act upon this, and the AAP and company and those judgment had continued. The dispute had continued. Now, facing this dilemma that whether if the 3B is not considered to be a return in lieu of 3, then Rule 61.5 itself would lead to an inference that there is no return which is prescribed under Section 39, which is required to be filed by me today. And this is exactly the view which I am holding with due respect, that today, in terms of Section 39, there is no return which is required, which can be said to be prescribed and filed by me, because 3 is suspended and 3B is not a return in lieu of 3. That being the case, what happens next? Another aspect is the Section 39 itself was sought to be amended by CGST Amendment Act of 18. However, it was never notified. And again, it was amended by CGST Amendment Act 2019. That amendment has become retrospectively effective only from 10th November 2020. I repeat, 10th November 2020. And if you see Section 39 as retrospectively amended from 10 November 2020, coupled with, sorry, not retrospectively, 10/11/2020, and retrospective amendment to 61.5 and provisions of Section 39, if we read in harmonious manner, the inference is that if at all the entire new provision can be given effect, it can only be from 10th November 2020 and not before that. It cannot be given any effect before that, and therefore, and apart from the validity to the amendment made to Rule 61.5, which itself is under challenge. And therefore, if there is no return which is prescribed can be said to have been prescribed and to be filed by a taxpayer under Section 39, then one date is not determinable. Section 16(4) provides for the selection of the earliest of the two dates, application of earliest of the two dates. One is due date for furnishing annual return, which is a certain date. But where is the date? How can I determine the date for filing the return under 39 when there is no return existing as on date, which can be said to be required to be filed under Section 39? So other date is not determinable. If one of the two alternate date is not determinable, then Section 16(4) cannot actually apply, cannot be operative, cannot be made operative. And therefore, in my humble opinion, the time limit for availing ITC is cannot be said to have expired for 1920 on 20 October or for earlier period. Also, in my the conclusion, the inference which I am drawing is even for Section 17, for 17-18 or 18-19 financial year, for any invoice or debit note on which the ITC has remained to be taken by the taxpayer by any genuine, for any genuine reason, he can stake the claim even today. That is my humble opinion. On the sideline, I may say that this time limit under Section 16(4), in my view, does not apply to the bill of entry at all. In respect of the imports, it does not apply at all. So that being the case, bill of entry is an independent duty tax-paying document which is prescribed under the rule for the purpose of ITC. Section 16(4) only speaks about invoice or debit note for the financial year, does not speak about any other document. So to reiterate my view that in my opinion, the time limit prescribed under Section 16(4) is not operative today, not applicable today, because it cannot be made operative in view of the impossibility of the determining one comparable dates. That is why the section does not apply, and one can take the credit even for the past period right from 17-18. Next. Listen, I'll just take, this will not take much time.
No issue, sir. No issue, please.
Coming to Rule 36(4), again, this has become a burning issue. It required that if the supplier's invoices, any supplier invoices are not uploaded, I would call it the unreconciled invoices, which are there for in respect of the supplies received by the taxable person for a month, then he would be required to take the credit to the extent of only 10% of the total credit involved in the reconciled invoices. Apart from the whatever are reconciled, he will be able to take full credit. But in respect of the unreconciled invoices, it has been restricted. We are onto the validity of this rule. Whether this is a valid piece of legislation or not, this is what we have to ask ourselves. Next. 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 Next, HR. Yes. First of all, this rule has been inserted on 9th October 2019 through the 6th Amendment, CGST 6th Amendment rules by notification 49 by 2019, by which Rule 61, 5 and 6 were also amended by the same notification. And this is the restriction. Earlier it was 20% and it was brought it down to 10% from 26th November. Coming to notification 30, by 23/4/20, this restriction would not apply. This is because of the COVID and all. We are not going into that. The question here is that whether this rule is valid piece of legislation or not. My first proposition here, friends, would be this provision of Rule 36(4) is fundamentally ultra virus Section 16(4), Section 16(1) itself. And how? Section 16(1), which provides for the grant of the ITC to every registered taxable person on the supplies which he is receiving of the goods or services or both to be used or intended to be used by him in the course or furtherance of business, subject to such safeguards, conditions as may be prescribed. This is the first proposition. Section 16(1) allows the comprehensively the credit on supplies, but subject to such conditions or safeguards, or the word used are subject to such conditions and restrictions as may be prescribed. The first proposition can be whether such restriction or proposition can directly take away my right to take the credit. That is the first proposition. It is like whether my right to take the credit can be extinguished by an action through the rule or notification when section 16(1) only speaks about the safeguards or restrictions. The word prescribed here is defined specifically, like all the legislation. Prescribed means prescribed by rules, not by notification. Prescribed by rules. So by notification, these rules have been prescribed. However, that notification, section 16(1) does not even contain any power to the central government to issue any notification. Please understand that. Section 16(1) does not provide any power to the central government to issue any notification, not even on the recommendation of the GST Council. It has to be prescribed by rules. So the first is here my right which has accrued in my favor, right? And another point is that this restriction is again based on the information of third parties or some lapses on account of the third parties, and therefore such restriction can be flying in the face of section 16 overall intent and purpose, and statute section will always prevail upon the rules. Next is when the rules are found to be ultra virus section, they cannot be held to be maintainable. We are all aware of Intercontinental Delhi High Court judgment as upheld by the Supreme Court in the case of reimbursable expenditure. The rule actually, Rule 5 was of service tax valuation rules, determination of value rules, was independently talking about reimbursable expenditure without having any support or basis under Section 67 of the Finance Act. Based on that, this rule was held to be ultra virus, and a similar ratio of the principle can be held to be applicable in case of Rule 36(4). Again, the condition of matching of credit and restriction is found specifically under Section 43 or Section 43A. But for 36(4), under Section 16(1), no such source of power of such rule can be found under Section 16(1). Rule 36(4) power cannot be actually sourced under Section 16 at all. Next is that restriction under Section 43A, and which has not even been notified as yet, it cannot be introduced to the rules or circulars. And finally, the restrictions are unreasonable also. In fact, at times it is discriminatory, because if my total availment of the ITC is less than 10% of the total availment of total ITC of the reconciled invoices, I'm repeating, there are some invoices which are unreconciled, which are not figuring into 2A. If the total credit which is involved on those vendors' invoices which have not actually been uploaded by them for any reason, but if my quantum of ITC is lesser than the ITC, total ITC, lesser than 10% of the total ITC in reconciled ITC credit, then this restriction will not apply. Kindly see the board circular explaining this by way of an illustration, that how this will not apply if my quantum goes below 10% itself, even though some vendors' invoices have not been uploaded on the or are not reflected on 2A. This is clearly discriminatory, this is unreasonable, and this is impossible of actually implementing. This impossibility also arises when the vendor whose invoices were not reflected in 2A in the current month, actually later on he remedies the situation and corrects his error, or whatever lapses he corrects him. Whether how much credit will I have to take? My last month invoices of one vendor is not reflected when I'm looking at 2A. Therefore, I am restricting myself, suppose under 36(4). Now, next month when that vendor actually uploads the invoice, Shall I take it as a part of the reconciled credit of that period? Or I should take independently full credit of that? What about other vendors' invoices which were also not reflected for the last month? In my personal opinion, for me, I'm still actually grappling with the answer. I have not got any answer. This is impossible to actually implement. The machinery provisions itself is faulty, and therefore, in my humble opinion, this 36(4) cannot stand the scrutiny of the law. And recently there is a challenge to this also in the High Court and the Kolkata High Court, and there has been challenge also in Karnataka High Court in Calvin Klein case and Bagmane developers case also. These challenges are pending. Bagmane is in fact being heard finally, where substantial issue of time limit of safari retreat ratio and 16(4) plus 36(4) all are issues. These are the issues which are already involved into Bagmane developers case, where the interim relief has already been granted by the High Court. So, and as a result of this, any freezing of the ITC account is taking place, then the legality of that is really challengeable. Friends, leaving aside the e-invoicing, I will only deal with 2-3 minutes on this, the latest Kerala High Court judgment, right, today. The Kerala High Court judgment was in the context of the order by which the refund was rejected during, and there was a virtual hearing for which the personal hearing note was not provided to the party, right? High Court has actually gone through the board circular with regard to the virtual hearing and said that this is mandatory to provide personal hearing note to the party. Incidentally, you don't need even the board circular. Whenever a personal hearing takes place, it is the right of the party or his authorized representative to ask for the records of personal hearing. It has to be given. I am not supposed to ask. This is common for excise, customs, and service tax also. I don't need the board circular to tell me. And this is not a new law which is being set down for the virtual hearing purpose. This has always been a basic way. This is a part of the natural justice overall process. However, this was not given. That is one reason why. Virtual hearing, friends, in my personal opinion, virtual hearing is not a compulsorily, mandatorily to be given. I can still opt for the physical hearing also. The board circular has been taken as if once I have given a virtual hearing, the authority is washing off their hands and they are actually as if they have discharged their responsibility. If for any reason, there are a number of reasons by which even the virtual hearing also may not be practically possible for the taxpayers or the tax professionals. And this virtual hearing cannot take place of the physical hearing. If there are genuine difficulties in attending the physical hearing, mainly because of the COVID, or mainly because of the network connectivity, or everybody cannot be expected to be the tax expert. Everybody cannot be expected to be, when the people are working from home, every single person cannot be expected to have the facility, the technology, and the understanding of the virtual hearing. One can't force on him that when I'm working from home, I may not have that infrastructure to really take part in the virtual hearing. So therefore, therefore, the board circular cannot be taken as a final word that once there has to be a virtual hearing. Yes, it has to be taken only where physical hearing is not possible because of the COVID-19 pandemic. The virtual hearing should be given. But that virtual hearing is subject to such facilities which are otherwise applicable to personal hearing. There are certain sound principles of law. We have been discussing of late in one group in last 2 days. Therefore, one, the 3 adjournments which are given is not sacrosanct under section 75. This is the same provision which was there under service tax, excise, and customs. In a given case, for the genuine reason, there can be more than 3 adjournment also. By one letter, if the authority gives 3 dates in 1 month or over a period of 15 days, sometimes they give 2 dates and then another date. This is not the compliance with the 3 hearing. For that matter, he can say that please come before me for hearing on any date between 1st January to 31st January. He is not giving you 31 dates. So therefore, giving of 3 dates by a common intimation is not mean that he has already given you the 3 dates. There are a number of judgments available on this point of the tribunal also. When one authority hears and another authority takes place without first authority having passed the order, the new incumbent must give the fresh hearing. That is your right. Fourth, Reply is not a substitute for hearing, and hearing is not a substitute for reply. Therefore, even if the reply is not filed within the stipulated period, which is generally 30 days, and whether you receive the demand notice for 30,000 or 3 crore or 30 crore or 300 crore, the time limit is always in the show cause notice is 30 days. It is always so. It is not a statutory time limit. It is an administrative time limit prescribed by the board. But even if the reply is not filed within 30 days, then in that case also, the hearing is required to be given by the party. In fact, if you see the normally second last paragraph of any show cause notice, if the party does not file the reply within the stipulated period, or if it does not appear for the hearing in person when the hearing is granted, then the matter will be decided on the basis of the records. So one need not worry too much about 30 days. Before 30 days, if the reply could not be filed, once, I mean, as an advocate, we never ask for the extension unless it becomes very important. Otherwise, we only say that matter is being studied and we shall file the reply in the due course of time. And we should always, any show cause notice, always one should examine the annexures and all the enclosures which are properly given or not. That should be the first task which is to be completed. One should always go through minutely the relied upon documents in the show cause notice, see that the copies and legible copies are made available along with the show cause notice. If there are non-relied upon documents which have been taken away and seized by the department during investigation, it is your right to ask for the return of those documents, and it is the responsibility of the department to return that documents, even without your asking. They cannot say these non-relied upon documents are not required for you. It is not for them to say. It is for you to say that these are non-relied upon documents. Please return to them. Return to me. At times, it may become very important that those non-relied upon documents may become necessary for you for drafting your defense also. If you intend to seek the cross-examination, the principles of cross-examination are not taken away, dispensed with under GST. Fundamental principle remains. So when the demand is raised on the basis of third-party statements or records, or even the partners or directors or authorized officer of the officer, it is the right of the party to ask for the cross-examination of them. One need not justify why I am requiring the cross-examination, but one can always ask for the cross-examination, even particularly when the evasion cases and the fraudulent ITC charges are levied against the recipient buyer who might be a bona fide buyer. This cross-examination aspect may become very important. So one should be very clear about that, at what stage, for what purpose, and of whom the cross-examination should be asked for. And there can be any number of replies under even I can file my reply even at the time of personal hearing also in the form of written submissions. I can file my reply even after hearing has taken place, additional submissions or submissions which I have made during the course of hearing also. Before the order is passed, one can file the reply, as many replies as one wants. You have concluded the hearing, suddenly you find that there is another very important judgment or some development in law which has a bearing on your case, which is in your favor. Nothing stops you in law from putting that also on the records of the department during the hearing, and it can be in continuation of this. So these are certain fundamental principles of law which are required to be kept in mind. There are quite a few, but again, as I said, I'm only dealing with in very brief manner. Adjudication, reply, defense, these are all, because litigation is going to start in right earnest in the coming days. So indirect tax litigation, friend, is a altogether different ball of game. It is entirely distinct and different from the income tax or other tax litigation. So one should not really look with the same glasses at the indirect tax litigation. Fundamentally, one should be very clear from the show cause notice stage. Maybe some other day, this may call for some further independent discussion. With this, friend, I conclude my talk. Bimalji is already with us. Thanks for your patient hearing. And each invoices, philosophy, scope, and implications in the context which I would like to see in the international context, maybe some other time. Thank you very much. I take this opportunity to express my gratitude to Ahmedabad branch for giving me this opportunity to further fine-tune my little understanding on this subject, on all these burning topics, and share my views with all of you. Thank you very much.
Thank you very much, Shailesh sir. It's indeed a pleasure to listen to you, sir. And I can say that you research thoroughly on these topics or burning issues, and you shared the knowledge with all of us. And I also remember that when I was going to give a presentation on assessment and adjudication, at that time I have taken something from your presentation, and I'm thankful to you for that also, sir. One thing I would like to say, that for these research you may spend, I can say, a month or months, but you have summarized us all this in 1.5 hour, very short time. And friends, it's available with us for advising our clients, or putting your case before the adjudicating authority or any authority. So it's really handful research work which we are having, sir. I can say that समुद्र मंथन करने के बाद में जो अमृत प्राप्त होता है वो आपने हमको करवा दिया है. एंड आई कैन एक्सपीरियंस दैट कि તમે ગમતાનો કરીએ ગુલાલ એમાં ખૂબ માનો છો. સર, થેન્ક યુ સો મચ on behalf of Ahmedabad branch of WRC of ICI. We are thankful to you, sir.
Only 2 words. One is, there are some
Yes.
couple of small errors which I notice also. So by today night or tomorrow, I will share the corrected PPT and
No
my
issues, sir.
presentation, which can be circulated amongst the members and participants. One. And secondly, yes, these are the, whatever I have discussed in these judgments and everything, I would earnestly request all the participants to digest them, read them. Most of these judgments are easily available. And because sometimes we may fall in error when we directly take support to the judgment. One fundamental principle in indirect tax to be kept in mind is, facts will always determine the law which would apply. Law will not determine the facts. Your judgment which is available with you will not determine the facts. So we are in the probably habit of citing any judgment which at the first sight, and never go by the judgment head note. Any judgment which is to be cited for any submission, entire judgment should be read, and then only one should see whether it is to be relied upon or not. So please digest everything, and then if their applicability should be first determined in the facts of the each case. Every case will differ, particularly in the context of the liquidated damages, which I have discussed. Again, it is
Yes,
a subject which probably require only nearly 2 hours discussion, because I have just laid the platform today with all this, because a lot of
Sir, we will be keeping on some another day. We need it.
This oblique
Yes,
case,
sir.
you will have to tolerate this particular tolerate to do an act.
Very true.
For years and years, because this is an internationally hotly disputed subject matter.
Yes, sir.